In this video, traders, we're going to discuss a weekly Forex trading strategy. Great if you're time poor, but still want to be involved actively in the markets. Stay tuned. Hey traders, warm welcome to you. How you doing? All right, so weekly Forex trading strategy. Like I say, if you are time poor, this is some common questions that I get. You know what, I don't have the time to do this. I've got other commitments, I've got a job, I've got a business to run, I've got a family, I've got all these life stuff, and I like trading, I love to trade, I want to make some money in trading, but I just don't have the time to do it. So the key is to finding a strategy that fits in with your lifestyle. There's no point in actively day trading and sweating the fact that you've got to run out in about an hour to go to work, or you've got to go and pick the kids up from school, or you've got to do this or do that. You know, that's just adding pressure you don't need. So taking it a step back and go, okay, I want to swing trade, I want to do this, I want to be actively involved, I want to kind of grow my capital and wealth via the stock market or the currency market, whatever, but I want to do it in my terms. And something like a weekly strategy is okay. Now, I think that if you can do a daily strategy, that's better. So doing this kind of thing on a daily basis, but some people don't even have that. You know, some people work away, etc., etc., etc. So this is a broad strategy that you can start from. Now, I would suggest that there's other parameters you want to add to this. You want to add your risk rules, you want to add your targets, you want to add this. But this, even if you're not trading live, you're trading demo, you're just getting to the market, you just have maybe a few hours on a Sunday night, this is a good way of getting a feel at least for what the markets are doing. Now, if you get triggered into an order, you might want to look at what's going on, but ultimately the way it's structured is that you know, you've got your order set, you've got your limit in, you stop in, and effectively you probably only have to look at it once a week, which I think is on the minimum. Prefer to do it kind of twice a week, every day if possible, but hey. So anyway, let's talk about what's going on. So Sunday night, obviously the markets are closed. I'm talking about UK time. They're opening up later on in the evening, but let's say kind of Sunday afternoon or early evening. You're scanning the major pairs. You're scanning USD JPY, GBP JPY. I put that over the majors as well, even though it's not. Euro USD, cable. You can find out which ones you want to scan. Guys, majors in there, a few minors, but stuff that's, you know, reasonably thick, reasonably liquid. You don't want any gap risk on these things, you don't want any exotics or anything like that. And by the way, it works for other things as well. You just picking Forex because that's really super popular and super cheap to trade, and normally a kind of first step for many traders to get involved in the market. Okay, so you're going to look for pairs that are breaking above or below 30-day highs or lows for the first time. Now, we're not talking about trending environment, we're talking about stuff that's been in a range and has finally broken out of that 30-day high. A 30-day high is basically the highest it's been for 30 days, 30-day low, lowest it's been for 30 days. Now, like I say, if it's a trending environment, this isn't quite the strategy for you. This is quite the kind of rule, should I say, for that type of environment. So it's kind of plodding higher and higher and breaking new 30-day highs every day. That's no good. We want something that's been in a range, and then we're kind of scanning and saying, hey, has this thing broken 30-day highs or 30-day lows? Now, I've used 30, you can use 90, you can use 60, you can play around with that number, but that kind of is not a bad way to start off with. And you can also look for trend line breaks as well. So if you were going to look for kind of trending environments, you could scan for stuff that's broken out of a trend line to the upside, for example. And really you want a multi-day break with no wicks. So you don't really want to go in on Sunday night and see that it's just started to do it on a Friday, maybe pull back. You want something that's had I mean, it's going to depend on how much time you can put in, but you want something really that looks on the chart like it's broken through for a few days, and this type of thing. 30-day high, try to break through, broken through, and looks like there's sort of fresh air above it, and it's kind of done it with authority. That's what you're after. And the reason you're doing it once a week is your time issue, but also it gives you stuff time to work, you know. So a couple of days in, it starts to break, pauses, then it starts to go, right, now we're looking to place a trade. And this trade, guys, is again, you know, there's no recommendations here. This is not something that, you know, I definitely think you should absolutely 100% do, but it's a good framework, I think, if you don't have the time. And so, hey, this is how I would trade it. And by the way, guys, do check out our channel sponsors in the description below if you're interested in getting involved in the markets, if you understand the risks involved with the markets, maybe if you're time poor, maybe you want to support these limit orders, stop orders, being able to kind of quickly look through on C-Trade or MT4, whatever platform you decide to use. They offer both of those on MT5. Screen through the pairs and then put your 30, set it to 30 and see what the number is. If the number is, say, 120 pips, you have 120 pip stop. There goes your stop. Now you're very, very, very systematic with this. You've got a limit order in, and basically what you're doing here is you're saying, hey, if it breaks and carries on, I'm not involved in it. If it comes back to the key level, you're going to be triggered long. And so your long is here, you're waiting for the market to come back. And of course, if you're only looking at once a week, that could happen at any point during the trading week. Comes back, triggers you long. You're protected with this stop as long as you don't hold it over the weekend and have the over weekend gap risk. You're going to have relatively protected. And listen, guys, you understand that there's always risk in trading, and we had all sorts of debacles before where markets have moved aggressively. But ultimately, if you're a retail trader, you've got a negative balance protection as well. So go and check out that. And it's a regulated broker, so all of the kind of protections that apply to retail traders will apply if you are a retail trader. So you're looking to kind of put the order in and then you leave it. And this is not something that's going to be a super active kind of trading strategy. You're not going to get filled all the time, and even if you do get a trigger, you might not get filled. But what this does, and by the way, your limit, you can play around with the limit, but something like 2 to 1, 3 to 1. In other words, whatever that stop is, if that stop's 100 pips, you can have a limit 200 pips or 300 pips if you like away from that. And the idea is that you want to review it again. If you're in the trade, maybe you want to review it so you don't hold it overnight over the weekend. Overnight's fine, but over the weekend. But the idea of this, guys, is that if you want to kind of get a feel for the market, this isn't going to be super active. What this does is, rather than you just looking at the market and saying, oh, I would have bought that, I'll do this, do that, and not really getting involved, this gives you something to do. And that thing to do is to put these limit orders in. You're not going to get many occurrences of this setup, but you're going to see how markets respond to things like range breaks. You're going to see how the markets respond to things like trend breaks, whether you do get those pullbacks, whether you do get filled. Trade it with small size. If I was going to trade it with small size, again, not a recommendation for you to trade this, but if it's small size, what it does, it gets you a feel for what's going on. You have much more of a feel and understanding for price structure and price action when you have some skin in the game, when you have a very small amount in the game. When you're kind of just looking at it and just dabbling now and then, it gives you focus as well, like, okay, I'm going to look for my setups on a Sunday evening, etc., etc. It's better than just looking and kind of, I will get in the market at some point. Yes, I will, kind of like it. I haven't looked at it for weeks. It gives you a focus, gives you something to trade, gives you an opportunity, and then you can work back from that strategy. Like I say, as long as you understand the risk of trading, which you assume you will, guys, if you go through the opening account criteria with any broker, particularly to open the account, very, very quick and get you up and running straight away. But understanding the risks, you can go, okay, well, actually it gives me a little bit of skin in the game, gets me a little bit involved in it, and I can trade it like that. So it's a weekly break, or the 30-day break. Check it every week, 30-day ATR as a stop, limit kind of 2 to 1 or 3 to 1 as you prefer. And then if you do get filled, maybe you can check it out during the trading week if you have the time. If not, you know that your stop's going to be there, which will kind of mitigate a risk of the deal. And it's in the description below. Take care, and I'll see you in the next one. Bye-bye.